Welcome, welcome. Thank you for attending the MIT Sloan CFO Summit, and thank you for attending the Customer-Centric CFO session. With that, I am going to let me self-introduce Beth Kurth, one of your co-hosts, as well as Nick Kuros for this panel session. And I will turn this over to our moderator, Sinclair Ridley-Thomas.
Thank you so much. Can you all hear me? Awesome. So we're post-lunch, and we promise to make this entertaining and engaging. If you attended one of the earlier sessions where we talked about how to open a space and encourage participation, we will take a few risks here and hope that you all will join us on that journey. The risk that we'd like for you to be perfectly aware of and bring forward is asking questions intermittently. And so to the extent that you have a question that comes up and would like to either interject at a small point or just have a panelist expand on a topic, we'd really appreciate you raising your hand, and Beth and a combination of Beth and Nick will make sure to get you a microphone. With that, my name is Sinclair Ridley-Thomas. I'm a managing director at UBS based out of San Francisco, and I flew in because one, we love having an opportunity to sit down with smart business executives, and two, when I work with companies when they're raising capital, most often having the customer's voice as a centering perspective it facilitates a successful raise. And so by that, I was really attracted to this topic. To my left, we have several very experienced and very thoughtful folks who will cover a range of topics, some of which we have pre-prepared, some of which we'll respond to from the questions that you mentioned. And maybe with that, I think it'd be great if Chantel kicked us off with quick introductions.
Thank you, Sinclair, and thank you for everyone for your interest in this topic and panel. Very happy to have you here. My name is Chantel Breithaupt. I'm the CFO of Aspen Technology, a $1 billion publicly traded software company that specializes in asset-intensive industries, helping them with their sustainability and operational efficiency goals. I've been with Aspen Tech for 2.5 years. Prior to that, I was with General Electric around the world for 15 years across 4 of their companies. I've seen a few GE alumni here today at this event. And then 8 years in Silicon Valley with Cisco Systems. And from the perspective of how my career journey started, I'm from Toronto, Canada. I went to a small school there, jumped into GE, and it took me globally abroad. Very nice to be here.
Tim?
Thanks, Chantal. Hi, thank you everybody for listening in on this as well. My name's Tim Marmon. I'm the CFO of IPG Photonics. I've been there 25 years. I joined IPG when the company was about $20 million in revenue. We're about a $1.4 billion company now, so I've seen a lot of change there, a tremendous amount of growth. I was there when the company went public, dealt with the great financial crisis, COVID, geopolitical events over the more recent past. The company, basically, we make lasers. So the most simple way I can think to explain lasers is we change the way that traditional processes are done. So if you're talking about cutting, welding, medical applications, marking and engraving, or cleaning, you can basically use a laser and displace a traditional technology from performing that process. In terms of my career development, I actually started, I went to university in London. After that, I worked for Conoco when they were owned by DuPont up in the oil industry in Aberdeen. I then had a stint actually with a small grain trading company, and I learned really the nuts and bolts of accounting at that grain trading company in London for 3 or 4 years, and then I joined IPG after that, and I've spent 25 years there, so thank you.
Thanks, Tim. Nathan?
Nathan Gooden, thanks for having me on the panel, and excited to talk about this subject. I am with Squarespace. I joined Squarespace just over a year ago in October. And Squarespace, for those that don't know, is a web tool company to help entrepreneurs build a presence online, build a brand, build a business. Historically, you probably know it as a website company, but we're much more than that. We're an e-commerce engine. And most recently, you maybe saw earlier in the quarter where we bought the Google Domains asset. So excited about that new part of our business. So I actually started my career in Boston. I was with PricewaterhouseCoopers as an auditor, and frankly thought that I would be a partner one day at PwC, but got the opportunity to be CFO of a company in my late 20s, and that set me on a whole new journey. and was CFO of multiple different companies before I joined Amazon 7 years ago, and was CFO of the Amazon Alexa business, and left there just over a year ago to join Squarespace. So thanks.
Awesome, Nathan. And then Chris, to you.
All right, thanks, Sinclair. Great to be here. So Chris Sands, I'm CFO of a about $500 million digital health company called IntelliCare. It's effectively a platform that helps healthcare facilities fill their contingent labor needs. So when you think about the healthcare labor shortage and crisis that's going on, we help address that. I started my career about 7 years in investment banking and sell-side equity research, and then got the itch to go do the corporate thing, and so at a few stops running different teams within the finance function at public companies, so investor relations, treasury, FP&A, and this is my second CFO stint.
Awesome. Well, thank you all for giving that quick introduction. I think, audience, you know you have the right people on the panel. And on the topic of customer-centric CFO, that's a good point, and maybe a starting point is, who is the customer, Chantel, and how do you engage them?
Yeah, thanks, Sinclair. So I think that from my perspective, the customer is anyone who derives value from either my role or what the company has to offer. And that can be everything from the actual end customer, employees, shareholders, the board. For myself personally, as a female CFO, it can be a lot of DEI interests also I consider as my customer in the sense of my community. And so I think anyone who drives value from myself or the company, I would consider as a customer.
Awesome. And then, Tim, how do you think about the customer from your lens?
Yeah, I think about it very similarly. At IPG, in fact, like a lot of the customer interaction tends to be very, very technical, sometimes actually more of a counterbalance to some of the sales folks, particularly when you're negotiating terms and conditions. But some of the things I really think about in terms of customers, as in our direct customers, are where we sort of trending on things like on-time deliveries, quality, reliability, where warranty expenses going. But I also then think about this very much in terms of the other stakeholders that I deal with. So people that I deliver value to, like the board or investors. Vendors is an important one. There's a tremendous variety in the number of types of vendors that we deal with. Just as by way of example, I've got a D&O meeting to renew our directors and officers insurance policy later this week. So I'm meeting with 20 plus D&O providers to try and convince them of the limited risk and exposures that IPG has in an attempt to get our premiums down. We've got certain issues that we're facing at the moment. We've got an operation, for example, in Russia, and some of the D&O underwriters there are cautious about that, and you don't want any carve-outs in your D&O policy. So you've really got to go on a sales trip with them and convincing them. And very much in the role as investor relations, that's a very similar way that it's another major stakeholder that I have a lot of interaction with at IPG, with an outside stakeholder. So do a lot of investor outreach and post-earnings calls, that kind of thing.
Awesome. And then, Chris, if we think about most important skills to drive successful engagement with the customer types that you engage with and those that were mentioned by both Tim and Chantel, what skills are important from your perspective?
Yeah, so that's a big question because I think they basically said all of the stakeholders are the customers. And so, herein lies what I think is probably the most interesting and challenging part of the job, which is when you think about stakeholders that vary from your traditional customers who buy your product to your board, your investors, your team, they all have very, very different needs. And how you address those needs and work with them requires, I'd say, a wide range of approaches to different skills. So let's talk about a few, for example, and then I'll ask the others to chime in. But communication, for instance, right? The way I communicate with the board and the investors is very different from how I communicate with the team. And so, having empathy for each of the stakeholders to kind of understand what they're after, where they come from, their perspective, and then tailoring the communication to drive the right outcome with them, I think is an example of a hugely important skill. The other one that I would hit on to say is the ability to kind of oscillate, given those different stakeholder groups, from a very detailed knowledge of something to the ability to synthesize something, right? Like if I'm working with the team on a technical accounting matter that's important to the company, that may be something that the board needs to know about. they sure shit don't want to hear the same conversation I'm having with my team, right? When we go talk about it, because their heads will be spinning and they'll think that I can kind of completely miss the ball there. So, when I can actually look for developing folks on the team into senior finance positions, that ability to synthesize a lot of the technical nuance in the position, I think is incredibly important. So there's a host of others, but I'll let others chime in.
Yeah, Nathan, would love if you tackled that same question, key skills in engaging the customers.
I mean, I was trying to figure out who's not our customer after what Tim and Chantel said.
Yeah, that's right.
So I guess the CFOs were unicorns.
Yes,
So seriously though, I do think, similar to what Chris said, like I view the CFO role so important as a strategic advisor to not only the CEO, but to the business. So, like, we make key decisions that are going to drive the growth of the business, and so having that seat at the table to really help drive is very important. And you think about the CFO role today versus where it was 10 years ago, and we are much more about taking the insights of data to help drive and influence business decisions and how we operate. And so I think that skill set is a very important one, and I'll give you an example recently that I just went through with Squarespace. And in August, I unveiled a 5-year plan to the board. And following that, we developed our 2024 operating plan. And as we went through that operating plan, it was very, I've been there just over a year. And so, like, getting under the covers here of, like, what's really going to drive the growth of the business, these were very key decisions I was having with the business that rolled up to the CEO of where are we placing the seeds in 24 that are putting us on the right trajectory for 27, 28, 29. And, you have to be able to challenge the business to make sure that we're making the right investments that are going to have the ROI to put us on that trajectory. And so I do think being a strategic advisor is one of the most important parts of being a CFO.
Excellent point. And Chantel?
Yeah, I think the one thing I would add to the points that have been mentioned by Nathan and Chris is I think specifically CFOs need to state their intention with purpose that they are customer focused, because they're CFOs for sure, board, investors, got it, that's the usual. But I think to have a CFO who's clear in their intention, and the skill set is to role model it. So you role model it by being an executive sponsor of specific customer accounts, you go to customer events, you participate on advisory boards, you make sure that the sale to a customer has no friction in the process. So you walk the talk with intention and purpose, and I think that's where CFOs could be even more leaning intentionally with the end customer is the only thing I would add to a skill set.
Excellent point.
Yeah, can I add one more thing, Sinclair?
Yes, go for it.
To what Chantel said is, customer-centric could be construed to just, be able to engage well with the customer, but there's also this notion of, like, understanding your customer and kind of what their needs are, right? Not just someone that when things get escalated, can they talk to the CFO? Yes, and the CFO can smooth it over. But when you think about the strategic importance from the CFO role of helping drive the business forward, having that deep understanding of the customer and what impacts them and what trends they're likely to experience and the impact on the business is super important as well.
That's actually a perfect dovetail into the next topic, Chris, that we wanted to
So
cover.
can I just add one more
Go for it.
point
Go for
on
it,
that?
Tim. Go
Because
for
I
it.
think one of the other things that's very important is really building credibility, regardless of which stakeholder you're dealing with, whether it's the board, the other executive team members, investors, whoever it is, employees, that sort of forthright, balanced openness to make sure that your position is very credible and you can sustain that credibility over time is fundamentally important. So when things aren't great, you've got to be straightforward and say that they're not great, and that may be to the employees. If you've got to deal with quality issues, you've got to be very upfront with customers and going in and dealing with those quality issues. Because if you lose that credibility and you lose that trust, I think you erode the influence of the role.
Yeah, and I think, sorry, Sinclair, this is going to go for a bit.
Go for it. Go for it. I love it.
And
I
I
love
think
it.
to build on that, back to connecting, so the credibility, I think a great example of credibility can be when you're, at least in the public, and I'm sure it's the same in private, when you can be as adept as the CEO in explaining where the customer's at in their journey to investors, I think that builds a lot of credibility for the CFO and their involvement. So just tying to your point of credibility, where you can you can surprise the investors with being as business adept as the CEO when it comes to the customers and what their pain points and what they're looking for.
That's how you get tagged as a strategic CFO, not just.
Exactly.
Oh, that might be a panel idea for next year, Chris.
Oh,
Wait,
please, no.
way to seize your
That
participation.
title is exhausting.
No,
So,
it sounds
yeah.
like it, to a degree. So to the point of feedback and being listening in your role as CFO, Chris, how do you think about the way that your organization gathers feedback and then incorporates that into performance metrics?
Yeah, so it varies against each one of the stakeholders, but let me take the most traditional customer defined. So, we use surveys for our customer base, we use NPS for our customer base, we use summaries from account managers who have day-to-day activities. So, again, and our business has been very dynamic, especially through COVID, and so the needs of the customer are evolving and changing very rapidly, and so it behooves us to stay on top of that, and so we try to use all of those arrows in the quiver to try to get as much information as we can. So, certainly from the traditional customer perspective, we use all of those things and try to incorporate them. It's also the case that you need to be thoughtful about how you interpret that feedback. You want to be listening to what they say and not just dismissive because you may disagree. But an NPS score is not everything, right? And so being able to use those metrics and draw conclusions from them, but also be, appropriately, skeptical of the different data points, I think is important as well.
No, great point. And then Nathan, as you think about the way that your organization gathers feedback and then converts that into KPIs, how do you all do that?
Yeah, I'll go two different paths here. First with the external customer, and I think Squarespace does a great job of this. We use our pro community, which we call the Circle group, or Circle members, and they are the active users that are helping other entrepreneurs, and they really help influence our product roadmap. The feedback that they give us of what the entrepreneurs are saying about our business, of the tools that they need or don't have, the services, that does influence our long-term product roadmap, and I think that's a very important tool. The other one is something I implemented when I joined, is the WBR, the Weekly Business Review. And to be clear, I basically used the mechanism we had at Amazon and implemented here. But the reason I love this mechanism is because it is KPIs across the entire operations of the company. And so we're obviously public, and so there's no financial metrics in there that can be disclosed. But it is, as finance partners, we're looking at this data and then helping influence where we should make the decisions to grow or not grow the business. And another important part that I love about this is the voice of the customer. And so in the WBR, every week we have the customer ops team, which is our feet on the ground of listening to customers directly. And they come to that weekly business review with things that are pain points for our customers or things that are working really well that we should make sure that are available to all customers. And I think that is a great mechanism that on a regular cadence we can hear directly from our customer. The other thing that I would say is on the internal side is I have structured my finance team to replicate the partnership that I have with Anthony, our CEO, is replicated throughout my finance team with all businesses. So just as much as Anthony and I are interacting about decisions we're making for the overall company, my finance team with each of the GMs is doing the same. And so we have that ability to hear, but also influence of the direction we should go at all levels of the company.
Nathan, can you, I think this could be a practical tip for folks, and I'm asking
I was going to
for
say, they're the ones that get asked the questions.
No, I'm going to use this. I've done QBRs, I've done MBRs, I've never done a WBR, so how practically does that work? Who participates? What kind of stuff do you talk about, and how do you make it so it's not such a burden on the organization to prepare for something like that?
Well, and it is. You have to make sure that it is an automated process so that it's formulated. But we go through, we went through the life cycle of a customer, and so if you think about, going from the top of the funnel to becoming a customer to hopefully never churning, but the fact is they do. Identifying all of the KPIs that drive each of those, and then being able to look at that on a weekly basis. And there are some things you think about the enterprise side of our business. Weekly business review is not meaningful there. They don't move fast enough. The cycle of one of those customers is not going to be influenced there. But as long as it's automated, then you can start to see insights. And some things you don't see on a week-to-week basis. It may not be like, oh, it went down 200 basis points, not a huge deal. But over several weeks, you're like, if I just looked at the trend on a week-over-week basis, you wouldn't think that it is moving in the wrong direction or right direction. But if you look at a 5-week period, you're like, oh, something's going on here. But another example is there was something broken in the flow of a customer, and it was identified because of the WBR a couple weeks ago that there should have been a bell and whistle that went off in the back end of the tech, but we wouldn't have known that probably for a month or so if we didn't have the WBR and looking at why is this dropping. And for participation, we do have all executives participate in this, and then sometimes it's +1, +2, depending on what area we're looking at.
And Chantel, did you have one point that you wanted to add as well?
I think just going back to the feedback, one other thing I would add, and this is software specific, so I apologize if you're more industrial leaning, but it's also the calibration of the 2 points that Chris and Nathan said. If you have a digital journey with your customer, if you have telemetry or usage data, you can use that as quantitative data in the sense of looking at usage versus NPS. And the sweet spot is if you have a customer who has 95% usage and a low NPS, you have a phenomenal opportunity in that account because obviously your software is sticky, but they're not happy. Imagine if you made them 10 points happier, how much they would expand that account. So having the CFO look at customer-leaning metrics and tying the two and calibrating and showing sales where there's opportunity is another thing I would encourage you to lean into.
This ties into some of the, one of our last questions, it ties into some of the topics that have been covered, especially from your last points, which is embodying the voice of the customer and balancing listening versus leading. And I think Nathan, you partially touched on that with the weekly business review. Interested, Chantel, Tim, how you strike that delicate balance, and Chris as well.
I mean, I think, first of all, if you're going to listen, you have to lead first, right? I mean, you have to be out there asking questions, defining strategy, speaking with your different stakeholders. And then it's almost a feedback loop. You're listening to what people are saying as to whether they're in favor of what you're doing, if they've got other ideas, changes that need to be made. I think fostering open communication has been shown through a lot of different examples to really improve the efficiency, financial performance of organizations. I think then you get back into the leading, right? You have to take all of that information in and, to use words, synthesize it. And then you still have to make decisions, right? So I think one of the things that I was told early on in my career was don't prevaricate, having taken all of that information in, don't prevaricate about making decisions. Make decisions and be confident in them, but also understand that almost with every single decision you make, the outcome is going to be very different or slightly different from what you actually thought it would be, and that you will ultimately adjust down the line to that outcome. So don't try and second guess yourself in making decisions, and I think decision making is a fundamental part of that leadership.
I'm going to take a slight tangent. Earlier panel today / topic today with Michael Stainer on how to work with almost anyone. I sat next to an audience member, John Adams, and he talked about this concept of decision making and quick decision making. I'd love for you all to just share perspectives on how slow, fast thinking, slow, fast decision making is critical as a skill to refine so that you can run your organizations, impact your stakeholders well, and keep the customer centric / focused.
I'm happy to start.
Yeah, you go.
Okay.
You go.
So moving at a fast pace is so important for every organization. And one of the things that I do with my organization is whether it's a one-way or two-way door decision. And if it's a one-way door decision, that means you go through that door and it's going to be very difficult to get back through that door. So you better make sure you have the right high judgment people in the room to make that decision, and those decisions would normally boil up to myself or the CEO. If it's a two-way door decision, you can go through that door and you can come back without any consequence. Those should be pushed down lower in the organization as much as possible, and it empowers the organization to operate with more accountability and a faster pace. And so I think I use that paradigm for my organization to make sure that we're scaling with the business.
One or two door is the paradigm?
one or two-way door decisions.
Two-way door, got it,
Yeah,
got it, that's
I
great.
like it, Nathan. One thing that I discuss with either mentees or teams that we're developing, et cetera, or peers, is I think there's a bit of a mantra in the sense experience provides perspective, and sometimes you get asked, how do you make decisions quickly, at least from the quick decision making? And sometimes you have to challenge yourself to try different companies, different countries, different roles. And so the more experience you have, the more perspective you have on what risk to take, and if you even understand if it's a one or two-way door, because sometimes you don't even have the experience to know. But I think it's a great framework. So I would also add the slow versus fast, for me, depends on how much perspective I have based on my experience.
Chris or Tim, did you want to hit that?
I have not much more incremental to add, right? I mean, speed is incredibly important to the success and value creation, and to both the points that Nathan and Chantel made, recognizing where decisions can be made really, really quickly because the risk of those decisions is relatively lower versus ones that probably require a little bit more control, just given the magnitude of the decision is important.
I think the only thing I could add on it is maybe in relation to product launches and new developments. So, there's a stage, some companies I think wait too long to launch product and wait until it's absolutely perfect. There is a way to launch product when it's sort of beta stage or slightly after that, and it may not be perfect. What's most important is the way that you communicate to the customer about the product that you're putting out there and the expected and anticipated benefits of it, so that you actually get feedback much earlier on in the product development process. So it's not really a decision making, but it's maybe a cultural aspect of sort of keeping an organization dynamic. I think that's a very important thing to do, and understand that it may not work perfectly, but you'll get feedback now rather than in a year's time when it may be way too late to get that feedback from the market.
No, great perspective there. I'm going to have one last question for the panel, and then I would love for the audience to bring a few questions here. This one is pretty interesting. I think covers topics that will impact the audience. About risk management and methods for identifying risk within your organization, and potentially also within your customer base in particular, which we appreciate can be sensitive. You spoke about vendor risk, Tim, and related to geopolitical dynamics. Maybe we can start there, or if there's another topic, especially with respect to risk management and risk identification, risk mitigation within the customer base, tools that you use to do that.
Yeah, I think we use tools. I mean, people have risk management committees, and you can, you list out your key risks that you identify, and you put a sort of way of categorizing them either by the magnitude or the velocity of the risk, and you come up with a rating on this. And that's, I mean, you can go through all of these risks. They're often in public company risk factors, right? They define what you put in as your disclosure around it. I think, the real thing that's out there is the so-called black swan events, right? Those are always the things that you've never predicted, you've never known that were going to happen. And I mean, in the last 5 years, you've had two major ones. Well, we've dealt with 2 or 3 major ones. COVID is the first one that nobody had dealt with a pandemic before, and how do you react to that? And it wasn't in anybody's strategic planning or risk management portfolio. So at that point in time, you're not even modeling it. I think you're quickly pulling together leadership and teams to manage through that process and deal with that situation. We then had also on the supply chain side the Russian invasion of Ukraine and the Ukrainian war, where we relied on our Russian facility for a huge amount of our components. So having to deal, and that again was right up until the invasion happened, nobody thought that it was going to happen. But then over the course of 9 months, you have to reconfigure your entire supply chain. So I think the message I'm giving is that there's a lot of work you can do on risk management and mitigation, and it will address a lot of issues. But the thing that you always have to deal with are the sort of black swan events, the sort of unknown.
So my challenge to that, Tim, is how do you build resiliency within your organization, or how you all are thinking, so that you can respond from a finance perspective, have enough there, frankly, to deliver against it. What's preparation for that, if there is any, or is it just pay attention, keep your head on the swivel?
I think it's inherently the resilience of, it's not even the resilience of an organization, right? It's almost the resilience of humanity. It's the way you respond to crises, and you lever that capability to do so and structure it, lead it. I think that's as much as anything there. It's not necessarily going to come down to any particular process or disaster recovery plan. It requires a great deal of commitment, motivation, and I'd say that as much as anything is how you respond to those situations.
And you, Chantel, what do you think about risk management, especially within the customer base?
Yeah, I think speaking specifically to end customers, a few specific things that we do across the finance teams in combination working with marketing intelligence in the company is the first one we do is look at scan the earnings calls of our top 20 to 50 customers. You know, as I mentioned, we're in capital intensive industries, so oil and gas, chemicals, digital grid management, so heavy OpEx, heavy CapEx decisions. So we scan the earnings to see what they're saying about their guidance, their outlook, the pressures they're seeing in their industry, and we summarize that so we understand the end customers maybe risk from what they're saying. The second thing that we take a look at from the perspective is some of them in the sense of just even accounting decisions. So in digital grid management and the utilities that keep these lights on, you know, they go through a rate system. Everything needs to put through the rate that, you know, the businesses and consumers are charged. Their decisions on CapEx versus OpEx, us being a software company, makes a big decision on what they go with us and how much they spend. So from a risk perspective, we watch the accounting standards and try to not be their accountants, but educate them with the white papers that are out there and how they can consider the treatment of their software purchases. So there's some examples of risk management that we do.
Very nice.
Let me go a different direction. As we think about the end customer, and I think it's interesting for Squarespace because if I think about the customer, and in every recession to date that the company's existed, we've been countercyclical. And so where we as a finance team are making sure is that we're investing in the right tools for our customers so that we make it easiest for them to come online. So that if we go through an economic downturn, we can make sure we're helping entrepreneurs be able to come online and start a stream of revenue for themselves. And so we've been very active, especially this last year, since I've been there, to making sure that we are investing in the right tools and services to make it so easy for our customers to be able to start a new business if necessary.
I think that's such a great point, Nathan. One of the things we've done always in downturns is actually continue to invest in R&D, even increase R&D, invest in sales and marketing, because you want to be introducing new product, you want to be introducing improved product, taking cost out of product, so that when you come back into that upturn, you've actually positioned yourself much more strongly with the customer base than you might otherwise have been.
This has been, I think, a pretty interesting set of perspectives. Would you agree, audience? So to inflect the dialogue, we'd love to have a few questions from you all. And please don't be shy. Take risks with us.
And I have a microphone that you can speak.
I think we have one question here.
Awesome. Hi. My name is Rachita. I lead the finance team at a CRM company called HubSpot. My question is around R&D investment, and you talked about it. We talked about it a little bit in the morning. What I've struggled with is finding the right accountability frameworks with the R&D investments, and how do you make the trade-off of the right features for customer usage and customer value versus speed of feature development within R&D. So I'd love to hear more about any frameworks that you've used to hold that accountability with the R&D organization.
I can start. This will be, you'll probably hear from all of us. I think that the first thing, at least from a software perspective, is to ensure that we're focused on configuration and not customization. So I think the first thing for accountability is to make sure that we're working on something that is scalable and not a margin drag in the sense of commitment over a long time frame. You know, if your contracts are 3 to 5 years, you don't want customization, because it also leads to usually managed services or services component, which drags the software margin. So I think that's the first set of accountabilities. And then I think the second is, you know, having a really thoughtful, programmatic rationalization of the product portfolio. What's the return on investment? If there's a way to measure a P&L for your main products, are they giving the return? And what's your sunset policy? I know you guys will have something to add to that, so.
You go.
Okay, so
We could benefit from Amazon's expertise here. I think this is one of the
I'm
hardest
here representing
questions.
Squarespace, thank you.
Yeah. I think this is one of the hardest questions to answer, but
It is.
that's why
It's a
Nathan's
great
gonna do
question.
it.
Great question.
It is a good question.
So I think there's many frameworks to do this, and I agree with what Chantel said. I would say a key for us is we always put the customer first. And so are we delivering the best value to the customer and something that they're going to use? And so I have pulled back several places where I didn't believe that that's going to actually be something magical for the customer. And that is a high judgment decision, and there are ramifications for that. I just went through a bottoms-up 2024 operating plan because I wanted to get under the covers of every single head in our company, and we have 1,800 heads. And so evaluating where those trade-offs are going to be. And so part of that was, this is the first time I've looked at this level, so I wanted to go through that. It's very difficult to take a company through that, so you don't want to be doing that on a regular basis. But it does identify that. And so, we also use WBRs, MBRs, and so we implemented this, similar to from Amazon, we do department reviews, and that's for every single area of the company so that I can look at those investments. And we do have a framework, it is the same framework for every R&D area, but then on a monthly basis, I can see where those investments are coming and then measure some ROI. And, when I go through the budgeting process, we do develop, and it's different for every company, to be honest, we do develop the same framework that I can measure the ROI on a head in product, the same that I can measure in engineering, the same that I can measure in the people org. And so I can see where I'm balancing those investments. And as Chantel said, it is the most important thing. I always ask myself, what is the last thing we stopped doing?
Almost like a general manager approach, right, Nathan, in the sense of whoever it is needs to be accountable not only for delivering the innovation, but making sure it's commercialized and, so a general manager approach generally.
I think we have another question.
Yes, hi. My name is Dorothy McKay, and I'm Chief Accounting Officer at Vapotherm, a medtech company. I'm wondering, do you have any difficult cross-functional customers, and how do you deal with them?
Given medtech, Tim, I think that might be interesting one for you to handle, but others, please.
By cross-functional, what do you mean?
Other internal teams.
Yeah, like, for example, operations or sales.
Oh, you mean internal customers?
Yes, internal
Okay.
customers.
Okay.
Yeah.
So that helps frame it. Thank you. Yeah, sure.
I think it comes down to sort of some of the way an organization is structured, right? And I think that as we've grown, the need to have a much more functionally organized structure that globally is operating in a more cohesive fashion has been very important, because as we were growing rapidly, we were finding that things were getting very siloed on a geographic basis. I'm not quite sure I'm answering your question, but it basically is, if you've got sort of people who are accountable at a functional level across the organization, it then gets cascaded down the cooperation through the organization across those functions. And if you've got more siloed sort of autonomous operating entities, we've found this particularly around the world, even culturally, you can end up with a lot more conflict. Coming back to the previous question on R&D development, even if the sales group, and we do a lot of application laboratory work, so we'll have a customer who comes in and they'll test one of our lasers to do some esoteric application with the laser, Chantal. Someone was cooking cookies with our laser recently, which was one of the crazy things. Like
Chocolate chip?
and
Was
one
it
of the sales guys ate
oatmeal,
the
chocolate
laser,
chip? What do you got?
ate the laser cooked cookie. But that might happen in somewhere, and
I
you
like
won't
the
find out
commitment.
about that because you haven't been sharing that information. So you've got to have the application laboratory people, the sales folks, and the R&D people talking to each other, and then you've got to make a determination as to whether actually cooking cookies with a laser is a viable market, whether you're going to put any money into actually developing that product. So I think you've got to
Go ahead.
Oh, no, go ahead. And then I'll add.
I think it's hard to follow Tim with his laser cookies, but I think for the CFO, there's always a department you're going to have an internal conflict with. It just rotates. It depends on the scenario and situation. But what I would say consistently is, our role is to treat the leaders like adults. The worst thing we can do is be shown as misaligned as a leadership team. So having frank, transparent conversations, making sure they understand the reasons you have the the comments and visions that you do, or asking the company to do things and asking them to be the leader you need them to be. Usually it's things like that, a disconnect on, expenses or budget or these sorts of things. And
I mean, this is a total relationship thing from
Yeah.
my perspective. I think that's the only way to get over that hurdle. So, and I think this dovetails into the keynote earlier where that was the very topic. But, to something we said earlier on this panel is, using empathy and communication to show them that you know where they're coming from and you understand why they have their position vis-a-vis finance, but then helping them understand what your job in the org is and what finance job is, which is creating value in the business, right? Which is done by helping the business grow. So the answer is we're here to try to help you to get to yes, but we need to do so within reasonable boundaries for the business. So again, I think just investing in the relationship is how you get over that hurdle. I mean, what Chantel said, in a lot of cases, especially if there's different seniority levels, I mean, there's, in my opinion, two ways to get things done, right? You can get it done by authority or you can get it done by influence. Most of the time, you're not going to get very far in the long run with getting stuff done by authority. So investing the time to have the relationship so that you can influence is the best way to get through that, I think.
Great point. And I think we had another question that was in the
Yeah, I'm Mike Chun with
audience.
KPMG. So I have a specific question for Nathan. You talked about value for the customer. You always focus on that. Could you define what that means? And then for the rest of the panel, since we're talking about client-centric customer experience, share with the rest of the group, on average, in a given month, how many times are you out in the field visiting clients?
So when I think of the customer values, I tie it directly to our corporate values. And this is how we operate Squarespace. Squarespace has a core set of values that is reflective of the customer delivery that we want. And so delivering that value to the customer is reflective of that. And I do think it should be in the operations of the company. I'm not a fan of company values that are posted on a wall and not part of how the daily decisions are made. And when it is part of the DNA of the company and those daily decisions and how we measure performance, how we measure employee performance, how we hire, how we deliver what we're going to deliver to the customer, then I think it's a seamless thread of really what that customer value is that we're doing. And to your second point, I do think it is so important. I am such a fan of you have to be passionate about your product. And so in every role that I've had, and including being CFO of Squarespace, even in the interview process, I set up my own website because I wanted to understand the customer journey through being a Squarespace customer.
Yeah, I think for the rest of the panel, your question was how often are we with the outside in the field? So from my perspective I think, over a quarter, I would say at least 25 to 30% of my time are with the accounts that I specifically sponsor or working with salespeople to get to the art of possible with a customer. So I'd say 25% out of a quarter is externally focused with customer end markets.
And Chantel, what does that mean, you sponsoring an account? What does that entail?
Yeah, so for at least from the perspective I take, it's the kind of C-suite relationship that they have. It's not the salesperson, it's not the customer success journey person. It's really someone in the C-suite they can talk to about their vision, their strategy, the roadblocks they're seeing, obstacles they're seeing, things they'd like to discuss in the sense of how to work forward from a partnership perspective. It just gives them access to a C-suite member in our company for them to have the discussion about how we can, do more better together. And so my role is to take obstacles away from them and help them grow their account and see value with our product.
And from my perspective, I'm actually not really, I don't see customers very often. It's such a technical sale that if it's maybe a strategic relationship or there's some specific problem, I will, meet with customers, but I'm not on a regular cadence of meeting with customers in my business.
But to the point of stakeholders, Tim, if you think about not the buying customer, but the other stakeholder customers, how frequently are they involved in your quarterly engagement?
Oh, I mean, them I'm, very regularly involved in terms of investor relations.
Correct.
We've got, probably 400 investor meetings a year. You're meeting with, 100-odd investors during the quarter. You're meeting with, you've got your quarterly board meetings and all that. So there's a very regular cadence around the rest of it. We're just, given the technical nature of our sales, I'm not in the same cadence of meeting outside customers on that regular basis.
Fair.
Yeah, my answer is similar on the outside customers. We have a large number of relatively small value customers, so mine's more on an ad hoc basis as opposed to having a customer that we sponsor and spend a lot of time with.
We do?
Yeah. So each one of us, we really come from, we have different industries, we have different customer bases, and it's interesting, this is my first time at this conference, and so seeing the variety of how we think about it. In our company, we have a foundational part of our strategy, which we call our enabling imperatives, which is critical on top, that goes underneath the strategic thrust of how we're going to drive growth. And one of them is called customer intimacy. And Chantel, it sounds like your company has adopted some of this, that concept of at the C-suite having connectivity. We've actually worked with Korn Ferry, and they've got a program around it, around customer intimacy, and we're training all of our salespeople on how to build that bridge. So it's not just the sales to procurement, but it's and in this model, it's actually at 4 different levels. But what would be interesting is to understand how we lead finance and make that connection for all, not just ourselves, but all of our finance team, about where we have opportunities to connect at different levels with the customer. So I'm curious if that's part of what you're doing in that adoption, and if it's just for you, or if you're taking it a little bit deeper, and if anyone else is doing something along those lines.
Happy to start, and then, thank you for your question. I think that, so things I've done specifically, when I joined Aspen Tech, the main finance functions were FP&A and accounting. So I brought in specifically 2 phenomenal people that have worked with me before that are completely sales commercial leading. So their job all day long in finance is to help get to the art of yes, the art of the possible, working with sales and customer success. And so I brought in the function, I brought in people who definitely know how to do it, and that kind of role modeled for FP&A and accounting what finance could do. And so now we talk about customer wins, we talk about customer losses, we talk about the things we see on the customer dashboards. And I think transparency and visibility to the data, if they're curious, they'll find ways to, I want to engage with the customer because that's kind of fun. I don't want to be just back office all the time. So that's specifically how I brought it to where I am today. And I think from the perspective of the customer intimacy is also to, have them invited to sales meetings, have them invited to a customer event, make it something that they want to be part of, make it something special. And so I think just asking and leading are some of the ways we've done it, but I'll leave it to some of my colleagues as well.
I think the customer intimacy with some company like IPG actually is going to become increasingly important, right? The fiber laser that we make has been around for 20 years or so. There are competitors emerging, so that where you just had really a huge technological advantage, you increasingly need to have all of those touch points within the company, right? From the sales, it actually starts often with the application laboratory, the sales. You'll have customers come in dealing with production people when they're accepting the lasers, and you've got the service people after that who are dealing with it. Making sure that all of those touch points are intimate, if that's the word to use around that, positive experiences, so that you're actually resolving the customer's problems. And one of the ways we try to think about it at IPG is that you're trying to become more of a engineering consultancy rather than just a hardware supplier, and that means that we're actually trying to solve customer problems rather than just deliver them a laser and leave them hanging out there to install the laser. You're developing the processes, you're demonstrating to them the productivity gains, you're showing them how they can reduce their scrap rates, improve their yields, demonstrating more cohesively what the return on that investment is going to be. And I think that transition from just being, this is a great laser, to driving that value is a sort of cultural shift that we as an organization are trying to go through. I think there's actually a well-known Japanese company out there called Keyence who's got very, very strong, they've got like 70% gross margins, and they actually sort of talk about themselves as being an engineering consultancy, and they don't have they've got some technological benefit to the product that they sell, but a huge amount of the value they drive is from customer-oriented solutions rather than just the hardware.
Thanks so much. We're going to take one last Sinclair from the audience, and
Great.
then we'll turn it back over to you to wrap it up.
Absolutely.
Hi, so I really appreciate all of the insights I've heard so far. One of the things that you talked about, Timothy, was silos, breaking down those silos, having worked in an organization for 25 plus years. So, I'm currently at an organization that's been around for 20 years, so trying to understand or get some advice on how the CFO role and the finances role can help to spearhead that, sort of breaking down of the silos and, bringing everyone on the same page so that we're all looking at similar metrics instead of having, everyone have their own view of their world. And then the second part of that question is sort of what is the CFO's role in developing the customer journey? And do you feel that it's the organization should be the ones developing those metrics for the customer journey along the way, or is that sort of, a top-down approach? So I'd love to hear your commentary from the panel.
I think, first of all, in terms of the question around the silos, I think there's two elements to it. There's very definitely, if you don't have strong leadership and a strong tone at the top set by the CEO ultimately, that information needs to be shared and communication needs to improve, you're going to have less chance of succeeding. That's kind of at the macro level if you're sort of trying to implement a functional organization and move away from, say, a regional type organization. It won't otherwise work without that tone at the top. The second thing, though, is that finance needs to remember really that they're a provider of services, and it comes back to what Chris and Nathan were saying, that you're ultimately developing relationships throughout the organization and showing that you can be supportive, either by conveying strategic information, helping people solve problems, right? That they actually look towards finance as being a solution provider. And it's really those building of those relationships that will break down those silos. I think when you run an international organization, as a leader, you have to be visiting, even if there's nothing much going on in a region, showing your face in an area, even if they're a very small percentage of your sales, going around, making that part of a larger trip is exceptionally important because people start to feel valued, that they're not just sitting out there in isolation. So it really does come down to that relationship building and communication, but I think one of the overriding things that we've understood is that it's very important to have that tone at the top.
Maybe one thing to add, which I think I heard in the question was, I think you said some of those silos are looking at different data, which can be disastrous, as I think you appreciate. So, certainly I think it's evolving that organizations will have a singular ownership over the data strategy, and increasingly I think that is becoming part of the finance role. So it sounds like maybe your org doesn't have that yet, but I would certainly recommend trying to drive a more coherent data strategy in the org and having that live in finance, which can't just be a finance edict. It needs to come from the entire leadership team, but saying, look, as an org, we recognize this problem. We think this is a solution. Maybe it'll live in finance, maybe it'll live somewhere else. But then rolling that out, and finance will obviously play, whether it has ownership or not, an important role in that. But that's critical. If you have different people looking at different data and drawing different conclusions, you just be spinning, as I think you appreciate.
Go ahead.
Oh, no, go ahead. Okay. I do think it's very important to note on your question on KPIs, a good example is the WBR that I talked about. Like, my team developed the WBR of what we're going to measure across the entire business in conjunction with the business. But the ownership of those KPIs lies with the business. And, we will drive with questions and, help identify patterns, but it is very important that finance doesn't take ownership of things that the business should own and drive. The other thing on silos I would say, and I think that this is going to sound rudimentary, but if it's implemented correctly, it does break down silos, and that is a corporate goals process. When I came to Squarespace, they had goals throughout different areas. They didn't have a single thread of like, here's the top 4 strategic priorities of the company, and here's the goals that we're going to report out to the board, here's the goals that we're going to report out to the executive level, and break that down all the way down. And what that does is you get the interdependencies and codependencies across the organization and alignment early on. And so that does help break down those silos and get alignment and ownership throughout the entire company.
Yeah. The only thing I would add is maybe a specific example, just to bring it home in the sense of something that we've done within AspenTech. So we're functionally organized. So we have product management, we have sales, we have services, and I don't know how your company's structured, but let's take a functional structure as an example of silos. If you measured product management, R&D, sales, each on their own functional metrics, completely siloed, you don't get that synergy of across. So we implemented product growth teams. So when we have a conversation, it's not by function, it's by, for product A, the sales, the service, and the product manager come in, and the three of them have to explain as a triad the results or outcomes for that product. And that's how we've taken it from function to outcomes. So that's just an example to something that you could think about depending on how you're structured.
How long did it take to do that?
It took about one fiscal year to get everyone kind of organized, the data, the mechanisms, the right kind of questions. So about 4 quarters generally. Yeah.
Well, with that, we are just coming up on time for the panel. Please join me in thanking our panelists for making time to share this insight. And thank you all so much.
Thank you to our terrific audience and our moderator.
And thank you so much to you all as audience members for being engaged. We hope you enjoy the rest of the summit.